Good afternoon, traders. Thomas DeLello here with the Order Flow Market Update for Friday, October 18th. And wow, what a week it's been, guys. Very heavily news-influence-based market this week. Of course, I'm not going to rehash all the government shutdown and potential default situation. We're all well aware of what happened this week. But how that affected the market, it's something we haven't seen in quite a while. Where, every day this week, Monday, Tuesday, Wednesday, Thursday, the market was hanging on every word that came out of the mouths of any politician that stepped up to the microphone, or whenever their aide had a statement to make, the market would react. So, it was a little bit of a sketchy environment this week. And all in all, Thursday, yesterday, being one of the toughest days to trade in a long, long time. Monday, Tuesday, Wednesday, definitely some opportunity, but all in all, a trade. Most, when people make videos for their blogs and, they make videos about the market, they tend to always harp on the positive, and almost create an illusion that it's all about perfection and that there's no losing trades or losing days. There's the reality of the market, guys, is that part of this business of trading, part of the day at the office, includes losing trades. It includes losing days that are going to happen once in a while. But here's the thing, if you're trading with an edge and you know that you have probabilities in your favor over time, as long as you're managing your risk, the probabilities are going to shine and the profit's going to take care of itself. Again, as long as you manage your risk in the situations where you're wrong. And there's a simple elegance to what we're doing here, how we create our whole frame of reference on our dashboard here and how we use it to identify opportunity, our zones, our whole dashboard, our order flow information here, our reference points. They all bring an element of organization to the order flow data, right? And until price reaches an area where a trading opportunity is most likely to occur, we're not sitting here obsessing over all the minor ebbs and flows in the market, right? We employ a different kind of thinking that focuses on the order flow that's actually causing the price movement. The result of imbalances between buying pressure and selling pressure, particularly against levels of support and resistance, which for us are areas of supply and demand in the market, right? Our goal is to identify shifts in the supply and demand in the order flow, which clue us in that change is coming and opportunities setting up, right? And when you get to the point where you can not only identify the patterns that represent opportunity, but also take it a step further and understand the behavior behind that pattern that's setting up, then you're set up to profit from it. And I mean, let's face it, guys, knowing where the key zones to initiate trades from are located, where they're located, and what patterns to look for that tell you when to enter that trade is empowering to you as a trader. Why empowering? Because the surefire way to empower yourself and improve your peace of mind trading the markets is to utilize a method that makes logical sense, right? And if your job is to be a trader, then at the very least you should understand and agree with the logic you're trying to utilize in the market. That's going to do nothing but boost your confidence, right? And when you're operating with a healthy self-confidence, it helps to add to your edge that you're already trading with. It gives you that confidence to take the trades when you see the opportunity present. Now, some of those opportunities you're going to get in and they're going to invariably turn into losing trades. It's going to happen. It's inevitable. There are no absolutes in the market. In fact, absolutes in trading are some of the most damaging paradigms that traders can impose on themselves. Having that thought process that you're trying to be perfect, that anything less is failure. And it took me quite a while to believe really how uncomplicated trading can be when you break it down and realize it's about probabilities, opportunities where you have an edge, and accepting that, hey, there's always going to be an element of uncertainty that exists with every single trade, but that's okay as long as you're trading with an edge and you're managing your risk effectively on every trade. But it's only really when you start to think in these terms, in terms of probabilities, that you realize that it's all about setting yourself up to make the best real-time decisions, right? And, let's take a look at the market here. Now, we're in a rather unique situation here in the market that in any given market we're not in too often, but we're making all-time highs here in the S&Ps, right? So we don't have any previous supply zones above the market because the market's never traded this high here. So it becomes, we're interested in looking for short swing trades setting up, not only in scalping to the short side, which we did this morning. We had reference points in here that we used as we were setting up, explaining why they made sense to scalp in those areas, and if you wanted to hold a runner for deeper target to see if we can get any sustained price movement to the downside, fine. But the opportunity was there. At least the market gave you that breathing room, right? You identified an area in the market where you're looking for a rip. Boom, you got in. The market gave you that rip. Now how you want to manage it from there, that's the next step. Now, again, going forward, we're looking for swing trades here, but we're not going to just sit with a trade as the market continues to take out areas that we're looking for supply to come in, which we found little bits of supply coming in, little reactions off of our area, but then the market never gave us that big sustained move below 30, right? So now as the market comes back around and takes out these areas, shorts don't make sense anymore. So part of learning how to trade consistently is not only being able to identify opportunity, but it's controlling your risk and identifying, hey, you know what, if the market gets up into so and so area as getting accepted up there, that hey, shorts don't make sense anymore for several different reasons. First and foremost, they get above the previous area of sellers, but also hey, we don't have any other supply zones up here to lean on, right? So now what you have to do is go back into a patient waiting mode. Let the market top out, and if you have clues in the real-time order flow, you want to anticipate some topping action, that's a little bit more aggressive. But from a conservative standpoint, let the market top out, right? Form a zone. Let me clean that up a little bit. Give you some reference points, sell off, and then give you an area that you can look to sell upticks back into. That's our goal here. Fridays are always a little harder to initiate swing trades, because if you initiate the swing trade on a Friday, you have to hold it over the weekend, which in itself isn't the end of the world. But here's the thing, guys, if news comes out over the weekend and the markets are closed, you don't have that ability to manage that position and control your risk, right? The markets could open up gapped against you, right? So, we're going to see where the market ends up today. The market is very overdone here. Ideal situation would be to see the market continue to stay in this area here and then open up in the same area Sunday night, and then we'll start to look for swing trades to the short side. But again, the risk here in taking swing trades over the weekend is you got to hold it through the weekend. Now, the flip side risk there, like last Friday where swing trades were setting up, and there was a lot of news affecting the market, so we definitely didn't want to take swing trades last Friday, but we were talking about them, and what happened, the market opened up 15-point gap down Sunday night, so you missed the opportunity. But the same token, you didn't want to take that risk on. So that's the other side of the coin here. You don't want to take the risk that the market is going to be closed over the weekend, excuse me, and you can't manage your trade. But in doing so, you take the risk of missing the opportunity. So that's the fine line of how much risk appetite do you have, how much risk are you okay with. But what you have to look for here is we're getting into a point here now where we've squeezed out all the short inventory on the day, and they're getting into an exhaustion point where they ran out of inventory earlier, right? Where they ran out of buyers, and they're getting into that same point here right now. So it makes sense here as we get into the inventory level. We have some divergence. The only thing missing here is a supply zone because the market's never been up here. So definitely not a conservative type of area to be trading in here. Friday afternoon, take it for what it's worth. But come Sunday, come Monday, if we're up in these areas, we're going to start to look for some swing trade shorts and continue to scalp to the short side. It goes back to laying out that plan, setting ourselves up to make the best real-time decisions that we can, and then understand the market. We're not trying to predict, but we're understanding the clues, right? We're not going to stick our head in the sand. So if we have a short bias in here and we're scalping and maybe swing trading, and we make money on our scalps, but still holding a swing trade, and now the market starts to lift up and out, hey, swing trade shorts don't make sense anymore now because it's all about new buyers coming in. Let them get up to the next inventory level, and that's the next spot that you could start to look for opportunity, right? So, You know, what most traders do is spend too much time worrying about whether they're right on the particular trade that they're in, and what professional traders are concerned with is whether their action will give them a profit enough of the time. So it's a totally different way to think. So what really makes a professional trader is understanding the fact that it's not about winning right now, it's about making the right decision so that you win in the long run. You know, there's going to be losers along the way, guys. It's foolish to think otherwise, and I would stay away from and actually run away from anybody that would tell you any different, that they don't have any losing trades. But, you know, part of that, you know, that mindset you get into is being open to the present moment, what it brings, accepting the reality of the market, that there are going to be losers. There's always going to be that element of uncertainty, and not feeling constant disappointment at the way things should be. And what that all results in is a calmer, more confident, more productive way to trade. Trade patient, trade well, everybody. We'll speak with you soon.